Welcome to Moneyman Investments. This is our monthly feature, State of the Markets, where we look at the market's internal data and try to convert all noise that is existing right now into actionable market signals. Before we start, Moneyman Investments is a SEBI registered corporate research analyst with registration number INH 00002538 and BSc enlistment number 7017. Investments in securities market are subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, membership of BSc, and certification from NISM in no way guarantee performance of the research analyst or provide any assurance of returns to investors. Please read our detailed disclaimer on our website www.moneymaninvestments.com. Let's begin to see the state of the markets for June 2026. This is our proprietary market map, which is our proprietary tool. We've developed this over a period of time, and this helps us to give a very clear picture on how the market is looking, especially try to identify key turning points. This entire thing is color coded, and the color code is given below. If you see, and I've presented this for June, if you see, we started June with a lot of overhang from May. That's why we see a lot of reds, which is actually not so great. The environment was not so good. But somewhere towards the middle of the month, we saw a lot of improvements coming in. There was a particular turning point, which was around 10th, 11th of June. And after that, we've been seeing a lot of greens in this market map, quant market map. This basically means that the market environment became much better. And in the last couple of days, we've been seeing a few yellows, which means that the market has gone very dull. And that's what we've been seeing in the last couple of days. So June, once again, as per seasonality, lives up to its name. All the negativity that was there in May disappeared, and then June led to a lot of good moves in the market. This is how the Nifty 500 looked like. Now, the first thing that would strike anyone is that greens are all concentrated in particular segments, reds are all concentrated in other segments. The basic point is this heat map is split as per sectors. So we saw a few sectors going up very handsomely and a lot of sectors not performing so well. The market is not broad based. I've been saying this for the longest time that this bull phase in the market is not going to be a broad based market. Not everything will go up at all points of time. We will have certain sectors leading, and it will be very important to pick and choose which stocks one is investing in. And this is what we've been seeing for the last few months, especially this month. This is the most important takeaway that one can take from this particular chart. So the Nifty 500 returned about 1.49%, and June once again turned out to be a decent month, a good month actually, after a very volatile May. See, volatility in May is one of the highest in the entire year. Now that June is over, what does July have in store for us? July is usually a very good month. You know, this entire block of June, July, August, these 3 months, they are usually very good months for the market. And July is a month which has a very high win rate. Volatility goes down a lot. Returns are pretty good. Look at the average returns. And again, look at volatility. It's very cool down, and the win rate is pretty high. It is in fact the second highest win rate in the entire year. So usually we see that July gives great returns in the markets, and it is a time to be invested in the markets as per seasonality. Even if we were to look at the returns for the last 5 years, 15 years, and 25 years, July has been one of the better months in the entire year. So essentially, we are heading into a good month after a good fortnight in June, and it is a great time to remain completely deployed into the markets to take advantage of the positivity that is there. Let's look at what happened in June and try to draw some inference from there. So when I said that not everything went up in June, this is one of the best examples. We saw different indices giving different returns, but small caps stood out and by a mile went up the highest. If you look at the overall returns for the year, By the way, 6 months are down for the year, right? The Nifty 50 and Nifty 500 are still negative, while small cap is clearly leading the show. And one of the reasons is this particular month, the month of June, that really helped it to take off. Look at the index breadth. Again, we are seeing that all of these are pretty much in a healthy position. This again does not mean that the entire market is going to go up, but it means that the market is well poised to continue moving up. The momentum is sustaining. That's a good sign for now. This is the strength of each of these four different indices. Usually, I say that this dotted line, if you know these bars are beyond that, that means that they are those particular indices are seeing some strength in them. Nifty clearly is floundering. Nifty consists of the top 50 stocks and nothing much is happening. FIs usually buy these stocks, and FIs, everyone knows, are not buying. However, there is a lot of buying that is happening under the hood within small caps and mid caps. If one has to participate in this rally, one has to be participating in these particular two segments. Just looking at large caps is not going to help. That is something that I've been saying for the last 2 months, and I continued saying that. Right now, the small cap index is showing the highest amount of strength. The overall market breadth in the short term looks very good right now. It is still moderating and yet to take off in the medium and long term. But this is how it usually happens. The short term takes off first, and then we see the percolating effect on the medium and the long term breadth. So there is nothing to worry about over here. And when it comes to breadth movement, we've seen a pretty decent kind of movement that has happened in the last 1 month, which is between 31st of May, end of May, uh, and till end of June. So the entire month of June, we've seen good movement. There were a few metrics, especially this one, which got a bit overheated and that cool down happened. We saw that happening in the market, and we are once again poised to for the markets to continue with their momentum. This shows the returns distribution for all the stocks segregated as per large caps, mid caps, and small caps. And I've color coded it so that one can understand it very well in terms of where the action really is in the market right now. If one were to look at it, of course, small caps are the higher number of stocks in the market, and we are seeing a lot of them participating, but we are also seeing that not all of them are participating. That's why when I say that small cap index is showing strength, it doesn't mean that all small caps will go up. Always remember that, and we will keep coming back to this particular point, that this remains a stock picker's market at all times. That is something that one has to remember at all points of time. There were very few large caps which very surprisingly gave big returns in this particular month. And this is something out of character. Let's see if that continues. But there were very few large caps that did that. But otherwise, we are still seeing a lot of action concentrated in the small cap segment for now. Now, when we look at overall markets, I'm going to show four different metrics that I track very closely, just to understand how the shape of the market is, how the health of the market is. This is the metric that measures net new highs in the market, both on a daily basis and on a weekly basis. And we saw that June has generally been very positive. I showed you in the quant market map also how on 11th of June something changed and then the markets just took off. And after that one particular week, there we've been seeing a little bit of dullness that has come in. But things are still good, things are still positive. This can be seen from the velocity index, which measures the advances and declines. But I do a different one. I measure the weighted advance and declines, not overall advances and declines. Now, this is a rolling index, which is rolled over every 3 months. So if we look at this from the end of March, which becomes a starting point for this index, we see that there has been a lot of velocity in the market. It has been going up continuously. This also shows that the money environment is pretty good in the market and one needs to participate whenever this is happening. This means that momentum is continuing in the market right now. These are stocks versus their moving averages. What we need to focus on is how big the green areas are and how small the red areas are. Green is when majority, a number of stocks are in the healthy region, which is above the 4-week moving and 10-week moving average. The red one is when stocks are below both of them. Now, there's a very critical thing to notice. Now, again, if we notice that somewhere from the end of March, when everything was very negative and we saw a lot of red in the market, suddenly things just took off in the month of April. It it moderated in May. Again, from the mid of May, things improved in June. We saw a good upside coming in. July, I'm expecting this to continue further, and I'm expecting that more greens will be seen, which is that more stocks will show healthy movements in the month of July. This is the market health, and this just shows how the overall markets have been over the last 4 months. And this measures the health from a proximity to the 52-week high. So, how many stocks are near their 52-week high is what I look at here. And I have bucketed them into five different segments. Of course, the last two are the worst, but I'm essentially looking at the first two and how many stocks are coming in these particular two buckets, which is within 10% of the 52-week highs and 10 to 20% of their 52-week highs. So basically within 20% of their 52-week highs. In March, as you see, this was extremely low and it was a very, very tough market, but the market has been steadily improving. And that's a very, very good news. This is something that tells us that this remains a market to be invested in, and this momentum is expected to continue going forward. So the market health is looking very good. This is how different sectors performed. Again, what I'm noticing this time is that in this entire month, we've not seen a single time when the same sector is consecutively featuring in any of these metrics, either the top five or the top or the bottom two. So we are not seeing that the same sector is seeing money inflows and hence advances, healthy advances for 2 months in a row or 3 months in a row. This is the only exception where healthcare has done very well. But otherwise, we are seeing money rotating fast, and this also tells us that momentum is continuously changing. But that is very much possible in a market which has just come out after punching in a low, which happened sometime in March, and now we are seeing things improve. Something to be noticed is that value picks in the market, which are essentially the bottom two sectors, are just not working out. Look at IT, for example. When people thought that this is a value buy, it went further down by almost 10% in this particular month. So, this is a market which is not supporting value buying. It is only supporting momentum right now. And it is something to remain with that. That we need to remain, we need to have whatever market is giving in terms of tailwinds behind our sales. And right now, it is not value picking for sure. So this shows us what kind of quick movement that is happening in the market right now. If I were to dissect that further, and I usually bucket them within these four, buckets: momentum leaders, base builders, which could become the next momentum leaders, distribution traps, which could become the next laggards, and then structural laggards that are there. I essentially try and avoid these two. I always try and remain positioned here, whether it is my personal portfolio, my prop book, or my that is my personal portfolio or my client's portfolio. And then I keep a close watch on which are the base builders, which are consolidating in a very healthy manner. As I said, the market is extremely narrow right now, and this shows, the way how very few sectors have been participating in terms of momentum. I am expecting a few more to come from the base builder segment to momentum leaders. July should show that, and I'm just keenly watching all of these. But this is how the entire market is split up. If you were to split them up into which are the sectors that are moving up well, consolidating, or which are the ones that are positioned to go down or lagging the entire market. Now, this is my most favorite chart. People who've been on my WhatsApp channel, uh, I have been posting this chart. I've been tracking this since February and figuring out how and when the market is going to punch in a low. It's worked out very, very well. The view has been very well supported. This is a ratio chart which is between small cap index to the broader markets, which is Nifty 500. What I've been noticing and I've been seeing this is that we did, come very dangerously close to a complete breakdown. But I somehow was very confident after looking at this chart, because this is the time when Feb and March, when the pessimism was at its peak. I was very confident because there was a confluence of supports, and I thought that the probabilities weighed towards markets moving up, and positioning that way helped. Because see, what happened after March is that markets just went up. Now, not getting into technicals of what these bars are, etc. The bottom line is that once this particular price, that is the ratio, starts trading above this green line, small caps start outperforming in a big way. They've just crossed in the month of June. They've just crossed a very, very critical resistance, which is this falling trend line resistance. They failed to do so in the month of May. They tried, but then fell back again. But in June, they seem to have just broken past it. I'm just waiting to watch how July unfolds. But usually, considering the seasonality of July, which is very, very good normally, the expectation is that this kind of possible movement path may be followed by this particular chart. Now, I'd put this out on my free WhatsApp channel sometime in the last month, that is in May, that I was expecting it to start consolidating a bit for May, start moving up, a brief pullback, and then start shooting up. Now, the point is, the real magic will come in the small cap index once this ratio chart crosses this green line, because there's a huge base that has been built since somewhere around 2018. Honestly, since 2018 January, the small caps have underperformed the broader markets. But I think that we are entering a phase where they will start outperforming the broader markets in a big way. This month was one of them. We just saw the small cap index really punching much above its weight. And I'm expecting that this is the kind of path that will move. So, as a result of this, I have essentially positioned my clients' portfolios um, into primarily small caps and a lot of mid caps also. There are details available here. I'm very happy to show them also to you. Um, the idea is that this is, according to me, this is not the time to be invested in large caps. This is the time to churn out of your dead investments and look at the new investments that are going up, because every new phase in the bull market always brings about new leaders. That's what we've done with all our client portfolios, and that's what I do with my portfolios also. These are the three portfolios that I run. MAMM, which is the Moneyman Absolute Momentum Multiplier, which is the collection of just 10 of the strongest and fastest moving stocks in the market. And this is our flagship fund right now. The second one is the Moneyman Factor Champions Compounder, which essentially gives you an opportunity to be invested with the fundamentally and technically strongest stocks in the market. Here I have between 15 to 20 stocks which are fundamentally and technically extremely strong, and I try to hold them for a mid to long term. And the third fund is the Moneyman Sector Rotation Optimizer, where I keep taking advantage of sector rotation that is happening, and I do this by way of low cost and low risk ETF. So this is an extremely diversified portfolio. This is clearly MAMM is a very aggressive portfolio, MFCC is a balanced one, and MSRO is a very conservative one. I would like to point out the statutory disclaimer. I've already read it out, and it is important for everyone to remain cognizant of the same. So kindly do read this here. This is our ethos framework. All of this is in our website. There's a short presentation also that I've given about how I use this for managing my clients' portfolios. How these six broad points are basically, they form a bedrock of all our fund management. This is something that we are very proud to outline, and that's why I put out here. And this is our investment framework. I'm just going to skip this. So uh, I hope this was of value to you, and your time was well spent watching this. Uh, we are reachable by a lot of ways. You can email us, or you can visit our website. We have a free YouTube channel, a free WhatsApp channel, and I publish a fortnightly LinkedIn newsletter, which gives impactful market intel for busy professionals. So you can join all of them. All of them are free of cost, but do connect, and I'll be very happy to, in case you have any questions, we can always have a one-on-one meeting, which I do with a lot of people without any cost, and we can always discuss that further. So thank you very much for your time. I hope this was of value to you, and your time was well spent. Once again, thank you very much.